The joint franchise is growing like wildfire, but does it make any money? If you're a franchisee of the joint, are you going to make money? So in today's video, we're going to go through about what this franchise concept's all about, how much money it makes, and also towards the end of the video, we're going to go through how the stock's been doing, because this is a publicly traded company that IPO'd in 2014. So you don't have to invest and open up a joint franchise to get in on the joint action. The joint was founded to transform the traditional, often misunderstood concept of routine chiropractic care by making it more convenient, friendly, and affordable. So that's their mission. In March 2010, the joint was refounded with the acquisition of the original 8 franchise clinics. 4 years later, they IPO'd. Again, we'll go through the performance a little later on. The joint currently has 610 franchise locations and another 96 company-owned and operated. Physical therapy is a competitive industry with a lot of small players and a few large chains of clinics. Total industry receipts, physical, occupational, speech therapists, audiologists are estimated by market data to be over $35 billion. So very large industry. The franchise fee for the joint is $39,000. It's going to set you back $200,000 to $500,000 to open up a joint franchise. They want you to have a net worth of $350,000 as well as access to at least $100,000 in liquidity. Royalty 7%, marketing fee 2 to 3%, pretty standard for this industry. Of the 504 franchise locations they disclosed, the median franchise sales was $563,000. Average was closer to $600,000. You had one joint franchisee making $1.7 million, probably at a 40-50% profit margin. And then you had one franchisee barely getting by at $139,000. Now, using median franchise sales of $563,000, if you're doing a profit margin of 15%, it's going to take you about 6.5 years to get your money back. 5.5 years if you're doing a 20% profit margin. That's based on the initial investment midpoint of $346,000. Even at a 25% profit margin with that top line revenue, it's going to take you 4 to 5 years to get your money back. When you go to sell a joint franchise, it might be 3 times earnings, so 3 times the profit you're getting. It's going to be hard to hit $400K unless your store is really doing well. So I imagine you need to have multiple locations, 5, 10 joint chiropractor studios, and then sell for, a higher multiple to maybe a private equity fund or a larger franchisee, closer to 5 times, 6 times multiple to recoup your money and more. They added 66 locations in 2020, 127 in 2021. And now the stock, it's down from the September 2021 peak, 85% as of February 9th, 2023. To be fair, many of the hot stocks, especially tech stocks, crashed hard from that peak. The market cap, it used to be $1 billion company. It's now about $225 million. The PE ratio is over 200, but it's to be expected of a company like this with aggressive sales, marketing, growth plans that's looking to open up a lot more locations. If you want to open up a joint franchise, there's a lot of information because it's publicly traded that you can take a look at their financial reports, annual reports, obviously the FTD, but also talk to some of the franchisees, see how happy they are, talk to former franchisees, understand how much money they really made from the business day to day, as well as how much money they made on that exit when they sold the joint franchise that they were formerly owning. Hope you found this informational. Let us know if there's any other franchises in the physical therapy or chiropractor space you would like us to review.